Hello everyone, welcome to my channel, and this week has been quite a big week in terms of earning reports for companies. So I thought I was going to make a quick video that give you the basic information that you might want to know, the guidance and any challenges that the companies are facing. So I'm going to cover off Palantir, Hims and Hers, AMD, Disney and the trade desk. So let's jump right into it. Starting with Palantir, we can see that it's been quite a volatile week. So there was a massive drop off when it first happened, but they've seemed to recover. And overall, they're up 2.5% for the week, and they are testing that $120 mark when I did take this screenshot. So let's see how they performed. As you can see, the earnings per share was in line with $0.13 per share. The revenue beat by 3%. And for the year-on-year performance, earnings per share was up 63%, revenue was up 39%, and they've boosted Q2 and annual guidance. So they now expect $3.9 billion in sales versus the estimates of $3.75 billion. So overall, a very solid performance by Palantir, and I know there's a lot of eyes on this one. Up next, we have Hims and Hers, which has had quite a solid week and has been performing well recently. A lot of people like this stock and they think it revolutionizes healthcare. I need to do some more digging into it, but it does seem like a good company on the base of it. So off the back of their earnings, they have gone up 42% this week alone, which is quite an insane growth for a week. So if we look at the numbers, we might be able to see why. So earnings per share beat expectations by 67% at $0.2 per share, and revenue beat by 9%. But year over year is the big differences as well. So earnings per share is up 300%, revenue is up 111% year over year, and free cash flow is up 321%, which is massive. So what has driven all this? They are now up to 1.9 million subscribers, which is up 43% year on year. And the revenue is being driven by strong demand in weight loss drugs. Not gonna lie, personally I see a lot of people talking about them and taking them all over social media, which has definitely helped the cause. But there is some concerns of volatility remaining over regulatory impacts by the FDA on weight loss drugs. But what a performance by Hims and Hers. Let me know if you're holding this stock below. The next stock I want to cover that is on a lot of people's minds and in a lot of people's portfolios is AMD, or Advanced Micro Devices. This is a direct competitor Nvidia, so naturally there's a lot of eyes on this, especially with AI. But if we look at the performance over the week, they've gone up 5.23% off the back of their earnings. So let's have a look why. So earnings per share beat by 3% at $0.96 per share, and revenue beat by 4%, and it's at $7.438 billion. But year over year, earnings per share is up 55% and revenue is up 36%, which is very strong growth. So we look at the segment highlights. Data centers was up by 57% year on year, which was driven by CPUs and GPUs. The client segment was up 68% year on year, which is driven by the Ryzen 5 demand. But gaming was down significantly at 30%. Yeah, that's the one sector that's not performing at the minute. So if they can turn that around, they'll be doing even better. But they've just reiterated their guidance for Q2, which helps confidence. So yeah, quite positive for AMD, I think. Well, naturally, if Nvidia performs bad or has bad news, it affects AMD. But if you actually look at the health of the company, they're quite a healthy company. They're performing well. I would prefer to invest in AMD over Nvidia personally, but I'm not in either. I don't plan on buying them anytime soon, and that was not financial advice. Next up is a stock that has took a battering over the last few years, and that is Walt Disney. So within the last 5 years, they've hit highs of nearly $200 per share and recently had lows of $84 per share. So let's see how they've done. Initial market reaction is up 15% this week alone. So that is very positive. But why? Why is it up 15%? It's because they've absolutely smashed their earnings. So earnings per share was beat by 20%, revenue was beat by 2%, but for year over year, earnings per share was up 20% and revenue is up by 7%. So Disney's combined streaming services such as Disney Plus, Hulu and ESPN, which has achieved profitability ahead of schedule, with an operating income rising to $336 million from $47 million last year. So operating income overall has rose by 13% to $1.8 billion, which has been driven by higher visitor spending and the addition of a new cruise ship. Additionally, they've also announced plans for its first Middle Eastern theme park in Abu Dhabi. So naturally that's a good reaction. A lot of people are happy about that. But their full year guidance has been raised, so they expect earnings per share growth target 30%, which reflects confidence in continued profitability, and their strategic focus remains committed to cost savings and strategic investments in content, streaming technology and international park expansions. So they're saying everything that an investor wants to hear. They're increasing their profitability, they're still committed to cost savings and to strong strategic investments. So very positive for Disney. I just hope that it continues moving in the right direction, because it's had a rough few years, but we'll have to see. The final earnings I want to highlight for this week is the Trade Desk, who I personally think are a very solid company. I think the CEO is absolutely amazing. I think when it comes to businesses, he's one of the best. But they did have their earnings this week and it was up 27%. It has been quite volatile. So I believe they've had a 52-week low of $48 and a 52-week high of somewhere in the early $100. So yeah, it's been quite up and down, and I believe it's still down like 30% year to date. But a solid week for them, so let's see why. So they beat earnings per share expectations by 32% and they beat revenue expectations by 7%. Earnings per share is up 27% year on year and revenue is up 25% year on year. So this has mainly been down to growth in retail media and growth in CTV advertising, with partnerships including Netflix. So some quite big contracts that they've got, and they've also finally released the Hawkeye platform, which improves advertisers' return on investment and campaign performance. So the reason why it's been down so far is because in the last earnings they decided to delay the rollout of that Hawkeye platform because it didn't meet their standards, and they didn't want to release the product just to get a boost in revenue if it was going to cause problems in the long term, which is what I rate about them. So instead they waited until it was actually meeting their standards before releasing it to customers. So that's quite positive. And the Q2 guidance for 2025 is meant to be a revenue of at least $682 million, which is above analyst expectations of just $680 million. So yeah, quite good. But that has been it for a quick summary of all the major earnings this week. Let me know who you think the biggest losers are and who you think the biggest winners are. Do you own any of these stocks? Let me know what you want to see, and I'll see you in the next one.